The Magnificent Seven stocks are under the microscope as the group has taken up sizable share of the market's gains in recent years. Wall Street now keeping an even closer eye on earnings and growth for the Magnificent Bunch. But with great market influence comes risk. Christian Derry, Capital Fund Management Head of Macro Strategy, is joining us now to discuss. Of course, when it comes to Mag 7, we heard from Tesla, we heard from Alphabet, we're waiting for Meta and Microsoft, but there has been so much talk about how much of the earnings growth is powered by this group. How do you think about tech as a driver relative to the rest of the market?
I think a good way to characterize that is looking at NVIDIA and its contribution to the overall market. So if we look at NVIDIA year to date, it's 25% of the S&P's year to date return. It's about 25% of the index volatility. And these companies have gotten so large that on earnings events or we saw Jensen Huang talking at the GS Tech Conference, how there's insatiable demand for H100s. You're getting these swings in market cap on the order of 200 to 400 billion. So in terms of the dispersion of the index, which is essentially the inverse of correlation, it can account for 70 to 80% of the dispersion in the index. And that's part of the reason that we've seen the correlation on the S&P get quite low. The other interesting vector, I think, to consider is generative AI and the LLMs, it's not software. So the hyperscaling business models were really from software where the marginal costs go to zero. The reality, let's exclude NVIDIA for now, but if we look at the tech incumbents, they have to actually increase their CapEx significantly to build these compute clusters. And the clusters are used to not only train the models, but to do inference, and it's very costly, right? So we saw that Elon Musk just built a cluster he called a Colossus. It's based in Memphis. That's about 100,000 H100s. And the cost of a cluster like that is on the order of the single digit billions, and the electricity consumption is probably roughly that of a small city, right? So the reality is that the existing incumbents have to build out this technology because they can't risk falling behind their competitors. And I believe Sequoia did a study in 2023. They found that about 50 billion was spent on NVIDIA chips, and collectively the industry generated about $3 billion of revenue. So what that means is we haven't found the killer use case just yet. And the market's going to start to be more discerning in terms of path to profitability, scale. They're going to focus on CapEx and projections for CapEx. Now, obviously, we had Google overnight, and they have a cloud business that did very well, so they can subsidize these new technologies and business models. But it'll be interesting to see, for NVIDIA and the M7, we had Tesla, obviously it's a different animal, but it'll be interesting to see what the CapEx projections are for these companies. And if they miss, that could lead to a negative reaction of those stocks.
How would you broadly, Christian, characterize valuations for this group at these levels?
Well, okay, so if we focus on something like NVIDIA, right, so it is a quasi-monopoly, has roughly, I think, an 85% margin. It's the world's most valuable company now, so it's displaced Microsoft. I haven't actually checked today, but it's trading on 44 times forward earnings, I believe. So, that's pretty rich, relative to averages for equity valuations in the US. So it'll be very interesting to see whether some of these new investments actually pay off for these firms. We haven't seen it just yet. Now, to be clear about this technology is extremely disruptive. So even at our firm, we're a systematic manager. We apply a scientific process to markets. We're using a lot of these technologies, and we're finding many novel use cases for this type of technology. So it's clear that it's going to be a big deal, but maybe the market's re-rated these multiples a little too aggressively.
And so what are you as an investor doing with the group? Are you waiting to see what that killer app is going to be?
So we're a systematic manager. So we're, just to give you a sense of...
what do you mean by that exactly?
Yeah, so every day we ingest roughly 5 terabytes of data. A terabyte of that is tick data. We're trading hundreds of markets electronically. We're actually executing over 130,000 trades electronically every single day. So we run a very, very, very diversified business. And we're founded by scientists, essentially, so 100 researchers. There's a heavy physics DNA to the firm. And so everything we do is actually codified. And you can think of it as like hundreds of predictors competing with each other to decide how to trade all these markets globally. And we essentially only invest in very liquid markets globally.